Welcome to Tuttle Talk, a part of the Real Estate Radio Network. And now, live in studio, offering you a fresh perspective. He's your local real estate and finance expert. He's part of the Common Sense Party, and he's committed to teaching you how to win in any market. Your host, Andy Tuttle.
Good afternoon and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial wellness and show you how following a few key principles really can free you up to focus on the other important areas of your life, like your friends, your family, and the community. It's the most important hour of radio every Sunday, 3 p.m. right here on 660 a.m. The Answer. I am your host, Andy Tuttle. Thank you so much for joining me. You know, I've been in this business for 12 years in the mortgage industry, and I run a branch of Real Estate Mortgage Network. So proud to be there, but also after being in this business for so long and see people make so many mistakes off of old school, old guard teaching, I decided several years ago to get in here and figure out what was important, what was real, and how to build a financial team so I could communicate it to you. And that's what we do every week on this show, is show you the importance of a financial team, why you need to have these people around you, and then I bring them to you and keep you ahead of the game, ahead of the curve, and with your pulse on what's going on in the market so you can make smart decisions for you and your family. Now, if you missed part of this show or you want to catch all past shows, you can go to andytuttle.com. That is the best way to connect with us, andytuttle.com, and you can get access to our fan page from there, emails, contacts, all of our educational products, everything right there at andytuttle.com. But if you do have questions or want to talk to us immediately, you can call us, 214-736-9696, 214-736-9696. Got a great show today. We're starting off the show with Candy Evans from Candy's Dirt. We're going to talk about the great gratitude party we had this last week, and we're also going to talk about what's going on, some cool stuff happening in the real estate market. We're going to get with Matt Aycock of Pratt Aycock and Associates to tell you the truth about gift tax, because that's a major confusing issue right now. And we're also going to get with some fantastic entrepreneurs, Brandon Basic and Dwight Harrison of Wealth Builders Avenue, and they're going to show you the new way to invest in real estate. It has been working magically for a lot of people, and I think it can work for you too. It gets me excited. I hope it does you as well. And then we'll get with Brian Moore with our More Cool Tech segment. I think he's got a doozy for us today after last week's debacle. But first, let's get to our real-time real estate segment with our very own famous, nationally awarded blogger, Candy Evans of candysdirt.com. Candy, welcome to the show.
Oh, thank you. How are you guys?
Hey, we are great. Well, after that awesome party that you let us host at your gorgeous home, how could we not be wonderful?
Well, we are still recuperating.
As well you should be.
Yeah, that's what I was just thinking.
We're putting cucumbers on the eyes.
That's the way to do it. I'm actually wearing cucumbers on my eyes right now.
Cucumber glasses.
So we're all wearing cucumbers. I love it, but it was a fantastic party, and thank you so much for making that possible, Candy.
Oh, it was my pleasure. We'll have to do it again.
Well, we definitely will. We're going to be an annual event, so maybe we'll just have it at your place again next year.
Good. That's great. I mean, I might just put a for sale sign out in front, because you know what? It'll disappear.
It surely will. Oh my gosh. You have all those realtors over there. I tell you, more realtors just want to come just to see that home more than anything else.
Right.
Come to the party.
Get like 50 offers in an hour,
Yeah, you would. Over some nice cocktails. Okay, Candy, we don't have much time, so I want to get to your expertise here. So there's a lot of stuff going on in the market. Talk to us about the pulse right now.
The pulse is still hot, especially here in Texas. I've got a rental home down in San Antonio, and I've got two people trying to get into it, and this one couple needs to literally move in Friday because they can't find any place, so they're moving to Texas. They're moving to San Antonio. That's the San Antonio market. Dallas is pretty much the same here, especially in the Lakewood area. Homes are coming on the market. They're just being snapped up. We are looking at Case-Shiller. Those are the folks out east who do this report. But, the Case-Shiller report is always a few months late. So if we're looking, because by the time you buy the house recorded, it takes 3 to 4 months to get the information actually, out. So if we're looking at their report from July, it's pretty hot. Year over year, a gain of 12.3% in the 10-city index. That's pretty cool.
So just to make sure you clear what that is, that's the appreciation appreciation. So a 12.3% gain. So house was worth $100,000 last year. It's worth $112,000 roughly this year.
That's right. You are $12,000 richer. And you know what happens, guys, when people feel a little bit richer, they go out and they start what? Spending money.
It's good for the economy.
Yep, it helps the economy a lot.
So, okay. So when we're talking about this and the pulse of that market, this means now it is cooling down a little bit, but it is not cold by any means. I mean, this market is still hot. I'm still talking to real estate agents every day that are having multiple offers on their properties.
Right. Especially, again, the sweet spot is the, $500,000 to $700,000. Things are still moving up to $1 million, maybe up to $1.8 million in that area. Now, your big estate properties are still a little slow to move because you don't have the comps. I was talking to an appraiser the other day who was saying, like in Preston Hollow, you just haven't had that many sales. But I got to tell you, there is a hot sale to a big celebrity that I'm going to be writing about later this week. And this is the kind of stuff that we need to get that market juiced up and moving.
Okay. So, in other words, stay tuned in to candysdirt.com.
Sorry, I can't say anything now, but we have to. I'm sort of sworn to secrecy until Thursday.
That's hilarious. So stay tuned, then put it on, and then you watch for that, and she'll put it on her site. You can also just subscribe to her blog there at candysdirt.com or see her on Facebook. All those ways you can get hold of the expert, the fantastic and wonderful, and slightly off in the way that I like, Candy Evans of candysdirt.com.
The noisy doodle.
With the noisy doodle. Sweet dog, though. Okay. Well, thank you so much, Candy, as always, and we look forward to talking to you soon.
Thanks. And Bree says thank you for all the good treats, too.
All right. Thanks. Have a good one.
Thanks a lot.
Okay, guys, you're listening to Tuttle Talk here on the Real Estate Radio Network. That was Candy Evans. Go to candysdirt.com. Also, if you want to, you can also check out facebook.com/Tuttle Talk. You can find out everything, get connected to all the expert contributors that are on this show. And you can also call us 214-736-9696. We are happy to help and give you the information that you need and connect you to the professionals that can take care of you. I want to give you a quick market update. A lot has happened this week in the industry. We actually saw rates improve by about 1/4 point, which we've been desperately needing. This stuff that's happening in Syria, people are getting more of a grasp on that, although there's still a lot of uncertainty. Also, there has been a lot with the Fed going on. Of course, when Larry Summers said, I'm going to step down, and all the confusion that happened last week, and who's the front runner, and what are they going to do? Are they going to buy mortgage-backed securities? Are they not? And then the Fed came out with a meeting and said, hey, look, we are going to continue to buy mortgage-backed securities. We're going to taper down on treasuries. So what that means is people felt safe about investing in bonds. And so that basically, the short of it, that was good. That with some other geopolitical news has helped keep confidence in bonds, which has seen rates lower. And I told you a couple weeks ago, or it was even last week and the week before, about some good times to float. If you've been following me on Facebook, I was telling you some good times to float with your lender, and I told you the right thing, and it improved by 1/4 point. And if you listen to me, you're able to lock in and save that money. If you're curious about the best way to lock in your rate or how to get the best advice on that if you're shopping for a home now, or you want to see if you can improve your current rate, call us 214-736-9696 or email me at answers@andytuttle.com. Answers@andytuttle.com. Hey, Gabe.
What's up, buddy?
What's up, my man? How you doing?
I'm doing great.
I bet you are. You're always Gabe Abshire here, owner Utility Concierge. I tell you what, man, every week I hear more good news about your stinking company and all the stuff they're doing. That free service sets up all your utilities, all your moving and security and electricity and cable and internet and phone and all that stuff. It's all done in one place. And Gabe, you've just built a great company there, and thank you for making us look good to all our clients.
Thanks, buddy. I'm glad we can help. You got some exciting news. We're gonna go ahead and dive into the Android app world.
Finally,
way to go!
Finally, wow!
Congratulations.
Well, we got some very strong feedback. We're announcing our app and like, why did you not launch the Android at the same time? Like, okay, it'll be out tomorrow.
iPhone's not everything, It's true, it's not.
It should be out tomorrow, so look for that announcement.
Are we okay? Should be out tomorrow, guys. That's exciting. Are we all iPhoners here, by the way? Do we all?
Of course.
I got the golden handcuffs. I'm telling you, I don't want to be an iPhone guy anymore. I really don't.
What?
but I just can't help it.
It's because you don't know how to use it right.
I do know how to use it right.
I don't like the new. I'm sure that we don't have time for this.
We don't. Nope.
What do you think about the new update?
I love
Brian?
the new iOS.
Because they made it more like Android. Hello.
It's like Windows.
Hello. That's what they did. They finally got on board.
It's not simple. It's not Apple.
Not progressive, guys. You're not ahead of the game here. Of course, they did write a little thing in Bloomberg. I read a Business Week how they think they nailed it, and they're right on target. They know exactly what they're doing, but it seems to me like they're following and not leading right now.
Well, but they're losing the market.
Yeah,
Apple's way behind. But you know what? Their thing is that they don't do cheap, but then they released a $99 phone, so I don't get it.
Yeah, me neither. All right, you're listening to Tuttle Talk. When we come back, we're going to get into some conversation about gift tax. A lot of confusion around this issue. Can you give or can you give? Do you pay taxes? Does the person you give it to pay taxes? We're going to tell you the truth that could save you literally over $1 million next. Welcome back. You are listening to Tuttle Talk here on the Real Estate Radio Network. Okay. Guys, remember, first of all, that you can reach out to us during the show, and especially after this segment. I know you're going to have some questions, and you can call us, 214-736-9696, 214-736-9696. You can also reach out to me at answers@andytuttle.com, or get this episode and all past episodes and connect with us at andytuttle.com. Okay. So there is a lot of misinformation and disinformation around gift tax and the gift taxes and how that works. And today, to demystify that, is our very own expert on estate planning and all things related to really real estate, a breadth of knowledge, Matt Aycock of Pratt Aycock and Associates. Matt, thanks for being here.
Hey, thanks for having me back, Andy. I appreciate it.
Yeah, man, you bet. I remember I called you a couple weeks ago, and I was like, dude, I have a client, and I know this is not right with gift tax, but they keep telling me that they're going to get taxed on it and that the person that they're giving the gift to is going to get taxed on it. And so I've been doing this a long time, and I know before some of these law changes, and I'm just kind of setting this up here, that you were able to have a gift tax exclusion. And my understanding of it, so let me give you two things, Matt, because I want to set you up here and I'm just going to let you roll. And I know a lot of you out there, your parents or you are the parents, and you have some misunderstanding about gift tax too. So the way it used to be is that you had basically two checkbooks with the IRS. That's how they looked at it. And then Matt's going to tell you the way it is now. So the way it used to be is that it was roughly, I think, $11,000 or $12,000 a year that you could gift to anyone, really, without getting taxed on it. And if you gifted over that amount, it would go into, that was your annual checkbook, if you will, that the IRS lets you write out of with no tax implications. And then the second checkbook, if you will, and I'm speaking in general terms here, would be up to about $1 million, where if you went over that $12,000, then you could write, it would just start eating off of your $1 million. So in other words, if you gifted to someone $20,000 in a year, you would have $12,000 go off to your annual that's renewable every year that you wouldn't get taxed on, and that other $8 would eat into your lifetime. So instead of $1 million that you can gift $992,000. That's the way it used to be. And we used to tell people all the time, and there was still all kinds. People think, no, I can't give any money over $10,000 or I'm screwed. Well, now it's a little different. And Matt's going to tell you about this and what it means to you. So, Matt, how is it right now?
Well, it's actually a lot simpler, in my opinion, now. One of the big things I really like about the new system is it enables you to gift more. We're finding a lot of times these first-time home buyers especially may not have the cash requirements. A lot of different loan programs now require more cash to close, and so they've had to turn to family members to give them money for the down payment. But the number one misconception that I see all the time is people thinking that if they accept a gift, they may be taxed on that gift. That is not the case. It doesn't matter if you go over the annual amount or not. You're still not going to be taxed on that gift.
So, in other words, if you're the one getting the money,
the recipient, you're not going to pay a tax on it.
Okay.
It's a gift.
Write that down. Listen to that. That's good.
Now, the next rule you have to look at is the total of the gift to any one recipient below $14,000? And if the answer is yes, then you're good. If the answer is no, let's say it's $15,000, and that number goes up every year, but if it's $15,000, then you don't pay any tax because of your annual exclusion of $14,000. and then that additional $1,000 goes towards your lifetime exclusion, which right now is 5.12 million. So it goes towards that bucket. So if your estate is never going to exceed that lifetime exclusion, then technically you don't really have to worry too much about these annual exclusion limits of $14,000. Now, one of the things that we found is very creative on our end that we do quite often is, let's say, Andy, that I know you have a house, but if you didn't and you were going to buy one and your parents knew you needed $28,000 for a down payment and they wanted to give that to you as a gift. Well,
better be.
Yeah, exactly.
Well, put the foot down.
Mom can give you $14,000 and Dad can give you $14,000, which that keeps them both, because each one of them individually has an annual exclusion per recipient.
Even if they're married and don't have a job, let's say one of them doesn't work.
Correct. Does not matter.
A lot of people they don't think, they're like,
right.
no, 14,000 as a family. That's not the case.
Correct. And it's by recipient. So let's say you're getting a better house and they want to be really generous and they want to give you and your wife $56,000. So your mom and dad can each give you $14,000 and each give your wife $14,000.
So they can give 28 each, basically.
Sure.
And don't even have to worry. They're not even stepping out of the annual exclusion that they get.
Correct. Absolutely.
Well, what about the giftee? Does the recipient take any extra tax implications there?
No, there's no tax implications. It's just a gift. The only thing that I do advise clients on is if they have siblings and the will of their parents is set up to say 50-50 between the two kids, one of them's taking a gift now. Sometimes it's arguable that gift is as against future distributions under the will. So they may be taking some of their inheritance today, and it may degrade what is available to them at a later time.
So get with your estate planner.
Sure.
Basically. You're listening to Tuttle Talk here on the Real Estate Radio Network. We're talking about gift tax because there's so much confusion around this issue. So to recap what we've covered, one, if you're a recipient, don't worry about the tax.
Sure.
You don't have to worry about it. If you are a parent, and this is what happens a lot, and you go, oh my gosh, I'm going to give this money, I got to pay all these taxes on it. If I give $1 or $50,000, well, we just showed you, not even going into the annual, your total estate exclusion of 5.12 million, but you can give to 20 at minimum 28 grand each.
Sure.
To if you've got kids and you've got a let's say a son and a daughter-in-law or whatever that you want to give it to, 56 grand you can give as a family. You don't have to worry about it. Don't even think about it.
And we've actually used this as a tool for someone that's just right at that lifetime exclusion line that we need to go ahead and start taking down the value of their estate. We will actually start that process, and use that to diminish their net worth. And that's a great way to do so.
Oh, that is smart. So, okay, that's why I love talking to you. Guys, this is why you got to talk to a good estate planner who understands this stuff and can educate you on it, because this can literally save you tens of thousands of dollars in such a headache, and it's a few $100. Oh my gosh. Don't think about it, just do it. It really is that simple. You've got to do it, especially if you have kids or are going to. Okay, Matt, so I do want to go into a little bit of the estate piece, because people go, 5.12 million. I mean, how am I ever going to have that much? But I think there are some things that people need to understand that go into that, because your life insurance policy goes into that. Correct?
Yes, it does. Unless we do what's called an irrevocable life insurance trust, which is a method of actually holding a whole life policy outside of your estate. That's a fairly complex estate planning strategy, and I don't typically recommend it unless you are going to be over that $5 million, pretty significantly, actually. So one of the things, though, that most people don't realize is while you are limited to $5 million, that's each, the husband gets $5 million, the wife gets $5 million in a marriage situation. So they can leave an unlimited amount of money to their spouse for free.
Right.
So you could leave your spouse $1 billion and there is no tax on that $1 billion at all. It's when your spouse passes on and leaves that to their children or your children or whatever, that's when the tax would be triggered if it was over the $5 million threshold. So a lot of times if it's a married couple and their net worth is, let's say, $8 million, what we will do is we will actually say, $4 million would remain with the surviving spouse, because community property splits 50-50 at death. The other $4 million would pass through a marital bypass trust or some other vehicle of that nature, so that the surviving spouse can draw on that money during their life, but in the end it goes on to the kids tax-free. Because if you give the $4 million to the surviving spouse outright, and then they pass on, $3 million of that estate, in this example at least, would be taxable. So we can avoid that just through some very simple trust planning within the will.
And taxation on $3 million?
It depends on the year, but it can get as high as right at 50%.
I mean, guys, do you see how important it is to set this up right? And how simple it is, though. But I mean, this is $1 million cost you. So those of you, because we do have listeners that have high net worth, those of you that are out there that are listening to this too, and you're like, well, I am worth that. I need to worry about gift tax. Well, set it up right, and you're still protected. If you want to get in touch with Matt and get his Live Smart analysis, it's a free analysis to find out if you're happy with where you're at right now. If you were to die today, if you were to pass today, are you set up? Is your family set up? Are you comfortable with that? Text us at 72727. That's 72727. And text the word TALK NOW, all one word, no spaces. TALK NOW, 72727. You'll get that Live Smart analysis, and you will be able to get connected with Matt if you so choose. And also, if you just want to have a direct call with him right now and just don't want to mess with that, call us 214-736-9696, 214-736-9696. All right, thank you for listening to Tuttle Talk, guys. Coming up, we got a pretty cool another wealth building. That was about how wealth protection. Well, we've got Brandon and Dwight with Wealth Builders, and they're going to show you some very interesting strategies on how to create wealth through real estate next. Welcome back. You're listening to Tuttle Talk here on the Real Estate Radio Network. Thanks for staying with us. A real powerful segment just then on gift tax and estate planning and wealth protection, asset protection. But, sometimes you want to get to that $5 million exclusion that you have. And to do that, you got to build wealth. And there are a lot of ways to do that in this market. One of the most volatile ways, as we know, is the stock market. One of the most sustainable ways that we've seen throughout time in all different ways, even if you look at the 2007 crash, if you've owned real estate for 40 years long term, that you are still way ahead of the game. And what's great about real estate is that, when you sell a stock, when you cash out a stock, if you will, that stock is gone. You can cash out a home, reinvest it, still own the asset. Very unique. So we have some gentlemen with us here today that are going to show you some fantastic strategies to really take the burden off of you and let another company do the heavy lifting, and you reap the rewards. It is not a quick fix. It is not a shortcut. It's just being smart. So I welcome Brandon. I cannot say your name. Basic. Oh,
it's
my
pretty
gosh.
easy, Andy.
It's Brandon Basic.
That
was hilarious.
It's pretty easy.
No, that is pretty easy. And Dwight Harrison of Wealth Builders. Wealth Builders, yes?
Wealth Builders Avenue.
Wealth Builders Avenue. I like that.
We are on the corner of Passive and Turnkey.
I like that. Well, guys, I know you do a lot of business with Matt Aycock, Brett Aycock and Associates, and
true.
Talking with him, he said you guys are doing some really exciting stuff. So I wanted to bring you on the show here because this show, as you know, is about finance and real estate and helping people stay ahead of the curve. You know what I mean? Bringing the conversations to the water cooler, not just getting in them, bringing some new ideas and helping people have a prosperous future. And this seems like a very exciting way to do that. So Dwight and Brandon, tell me how Brandon Basic, Barclays, Brandon Barclays. What? So tell me how you guys got started in this and what exactly it is that you do.
Well, honestly, we got started in it because we've been involved in investment real estate for a very long time combined. And we were literally getting clients and investor friends of ours asking us to do everything that we do now for them. And so we decided to start a company that basically does it all, basically.
I mean, our investors, very few of them actually live here in Dallas. They live in California and all over the world, and they want to invest in real estate. They just don't know how. They don't know the answers. And so basically we solve all of that for them by finding the properties, we rehab them. I mean, people don't understand the intricacies of rehabbing a property. Like, very few people call us and say, or they call us and ask us, what contracts do I need? How do I deal with these contractors? What do they mean by this? People get scared and they get really frustrated about you can lose a lot of money in renovating a property. And then they have to find a tenant, and then you have to manage the tenant. And we call it tenants and toilets.
Tenants and toilets.
People don't like dealing with tenants and toilets. And so they come to us, and we're literally a one-stop turnkey shop for people that want to invest in real estate. They just don't have the time or the energy for it, but they have the money and the will. They just don't have the time. Okay. That's what we're here for.
That's great. So first of all, my first thought is, boy, that sounds too good to be true. So I've been through real estate investing courses when I was early on and doing that and buying rental properties before I sold them and actually invested it in this business, in my business. One of the big challenges was when I had a first couple and I was doing some renovations down actually near the M Streets, it was difficult because if you don't do a lot of properties, the contractors are like, yeah, whatever, man, we're busy. And then you get them and you don't know if you get a good crew or not, and you're not getting the best. That costs you more to renovate that property, and you run into issues that you're not aware of, and so that gets costly. So then they say, well, don't buy those properties, buy ones that you don't have to update and just buy and hold. But there's still a lot that goes on with this. So you're telling me you guys did this for yourself first.
Yes.
You bought properties, and you were successful with it, from what I understand.
Still successful.
Still successful with it. So you still own properties. Do you guys own solely single-family residential? Do you own some multifamily? What do you guys own? How does that all split up?
Well, I'm more single-family.
I actually got in. I have a mobile home park.
Okay.
So I actually got in backwards. I liquidated all of my savings to buy commercial, which is it's a great way to do it, but it's kind of the backwards way to do it.
Extremely risky.
It's very risky. I mean, we turned it around in about 2.5 years, learned a lot. But now that I know what I know, I mean, that's kind of more an advanced strategy. So we can do commercial real estate as well, but we really mainly focus on single families because that's where most people need to start.
You're listening to Tuttle Talk. We're talking with Brandon Basic and Dwight Harrison of Wealth Builders Avenue at the corner of Passive and Turnkey.
That's right.
I like that. And there's some very interesting strategies about how to help you with your own real estate investing, if that's something that you wanted to jump into and you're curious about that. First of all, if you have questions about it, you can call us 214-736-9696. We won't surprise you with being on air. It's an off-air hotline, but we can get your name. We can ask you some questions, and you can ask us some questions, and we'll direct you to these guys to help you with that. But, okay, so, Brandon, you say that so how does this process work now? Because typically the process is they got to do the research, they got to find the deal, they got to work with an agent that understands it to find the deal. Do you guys have the agent set up? How does that process work? Walk me through it.
I'm going to have Dwight. Dwight does all the acquisitions for our company.
Dwight,
Sure.
Walk me through it.
Right. Acquisitions is actually trickier than you'd think. You're comparing different neighborhoods, appreciating neighborhoods versus depreciating. We have a specific mold that we look for all of our rental properties. They have to cash flow. For instance, we're not looking for properties up in Frisco or McKinney or Southlake, Grapevine, any of the areas that some people may be more sought after to live in themselves. We're looking for areas that are safe, good schools. We want them to be appreciating neighborhoods. We want the end value for our investors to be a rough mathematical formula so that at the end of the day, they are making money. And so that's kind of what we look for acquisitions.
Yeah, we have a lot of people come in and say, I want to be in Plano. And, it might be...
They want to own rentals.
I want to own rentals in Plano.
Right.
And, that's a great area to be in, but that's not cash flow. We're about wealth building. And people don't get excited about when we sell a property that, it's $300, a month in cash flow. That's not what it's about. We actually have programs in place to help you buy multiple properties. Okay. So, you go buy 10. I mean, you're looking at $3,000. And then we can actually, with compound interest, we can actually take those payments to help you pay off that first principal or the mortgage on the first property a whole lot faster. So when you're investing, it's not something, like you said, it's not a quick fix. Okay. So we're looking in areas that are going to give you the best bang for the buck. Plano is probably not one of them. We can't buy properties at a great deal and fix them up and put tenants in them to cash flow what we would actually
want.
Right,
because you buy it for not 180 even or whatever. You fix them up 200, they're not going to get $2,400 in rent or even $2,000. It's going to get $1,200 to $1,500, right?
You're going to get $1,500 a month on a $200,000 home in Plano versus maybe $1,200 a month on a $125,000 home in Fort Worth, Watauga.
I think,
those types of areas.
and I agree with that. I think Robert Kiyosaki was right way back in the day, of course, when he's like, don't let someone tell you that losing $100 a month is a good deal.
Correct.
No.
Yep.
Have it make sense up front. Because if they said, hey, this is a great yield play, which means it's an equity play, maybe you're going to sell it. Oh, don't worry about the cash flow. You're going to sell it in 5 years. You're going to make a lot of money. Well, if you did that in 2003 and you decided to sell in 2008, that deal didn't work. So there are some plays there, especially with commercial, but it's advanced strategies. Have the deal make sense up front first. It sounds like that's what you guys are doing.
We would never buy a property that we wouldn't own ourselves. As a company, our exit strategy is if nobody buys it, which obviously hasn't happened, so we have to buy our own. We're going to buy it.
Yeah, we actually physically own them before we sell them to the investors. So we always tell new investors that come in, hey, if you don't want it, we're perfectly fine with that because we're making money on it every month prior to before we sell it to you. So, I mean, we're perfectly fine keeping it.
I love that. So thank you guys, first of all. You're listening to Tuttle Talk here. When we come back, we are going to get with Matt. He works with these guys. Let's find out what they are, how is it like on that side, and then I want to get with you guys on what kind of dollars does it take for someone to get started with this, what they need to know before they start, and what kind of education process you have for them to make them feel comfortable. So we're going to give you all those answers and get to our more cool tech with Brian Moore after this. Welcome back to Tuttle Talk here on the Real Estate Radio Network every Sunday, 3 p.m. here on 660 AM. The Answer. We're having a cool conversation with some pretty entrepreneurial guys that have invested in real estate themselves, been successful at it, still successful at it. Not like those guys that make all their money on writing books on how to buy and sell real estate, but don't make any money at actually buying and selling real estate. So they also have a pretty cool system to help you invest in real estate without taking on the burden of needing to go do the due diligence, get the contractors, figure out how to find the right real estate agent, figure out how to set everything up and do the rehab and all of that. They do that for you, and they have a way to help you grow your wealth through real estate. So Brandon and Dwight with Wealth Builders Avenue, thanks for staying with us for another segment. I want to pick up where we left off. Okay, so we talked about the basics of what you do and that with the kind of the what and the why, but let's get to the how. So one, does the investor comes to you, let's use Gabe for an example, who's here with us and owns rental property. He comes to you. Does he own the property? Does he buy the property? How does that work?
We buy the property.
Okay.
So our acquisition team will find the property, and our company will actually close on the property in our company's name.
Okay.
We then rehab the property. Our normal rehab's over $20,000. And normally takes us 14 to 21 days. Now,
guys, that's very quick. That's like lightning fast.
When I say $20,000, that's our price. If you were to call that same contractor, I promise you, your price would be over 30. I promise you.
At least 30. Yeah.
And most renovations, that's very legit. 30. If you're updating your kitchens and your bathrooms and you run into some other issues, maintenance issues, and you're doing paint and all that stuff, and maybe prettying up the back, because we do renovation loans all the time for primary residents, 203K loans, keeping them updated to be up to market, 30 to 40 grand, very normal.
One of the key differences with our companies, we call it a tenant dream condition. Everybody kind of knows a rental rehab is just kind of a basic bottom of the line stuff. We gut kitchens and gut master baths, and we do awesome finish outs. The reason we do that, number one, we want to rent that property for the highest dollar that market will actually take, and the tenant will basically walk in there and say, you're telling me I can rent this property for, this is nicer than most houses that I can purchase. That's exactly what we want.
So do y'all just do rentals, or do y'all set these up to flip, just to sell? What's the play for the investor? Is it a long-term play?
Yes. Yes, it is.
So the investor is going to come along, and they're either going to be a cash buyer or they're going to take out a mortgage, and we can assist them with either way. And that's kind of how Matt comes in as well with the title company. And these guys are basically buying to buy and hold. So like Brandon had said, we use something called compounding cash flows. So we just take, nobody's really excited about that $300 a month per property. I mean, if they have, and we'll get more into how much it costs to get them into the property in a second, but if they have enough money to get into each property, they're not going to be excited about $300. But when you multiply that times 5, 8, 10, however many properties, and you invest all of those dollars, the cash flow, you're not allowed to touch. No touchy.
No touchy.
So, no touchy. So you're going to literally invest all of this cash flow back into the first property or whatever property has the lowest loan amount. So we educate them as part of our seminars and our educational things, because that kind of adds a whole new nuance to how it works. Well, so that's what excites everybody.
It's important to really point out here that this is for actual wealth building. It's
Correct.
not to increase your paycheck, your monthly paycheck. Mm-hmm. I have 3 rental properties myself. I've never taken one dime out of any of them and put it in my pocket. That's a horrible, horrible strategy when you're trying to build wealth. And that's what these guys have set up as a model, to where someone like I can invest with them and basically treat it as if I'm buying stock, or whatever, because all the hard part of finding the property, fixing it up, and putting a tenant in there is done. And I don't want to do that. It's the worst part of owning rental property, in my opinion, but I'm glad somebody enjoys it.
You're listening to Tuttle Talk here on the Real Estate Radio Network. We're speaking with Brandon and Dwight of Wealth Builders Avenue. Okay, guys. So then if Gabe here is the investor, but you own the property, it's his money he's going to put up, but you own it. Do you have a separate contract, I guess, with him do you guys do guaranteed returns or anything like that? How does this guy get protection, and how does he make sure he's making money?
So first of all, the investor won't even know about the property until a tenant's in place. Okay, so we do the whole process, and then we market to our investors. We're to the point now we send text messages, and they call us and say, I want to put a contract on this property. Okay, and then we immediately put them through to the mortgage broker, and they go through the process.
Yeah, I mean, the contract is literally the Texas Real Estate Commission contract. There's nothing funky or weird. It's just It's like a normal sale of a normal piece of real estate. That's what you're buying, is a piece of real estate
with a tenant in it.
Right, correct. So the tenant's in it. And if for some reason you put a contract on it before, we're starting to literally pre-sell them now. We're kind of getting more popular. It's kind of nice. But if you buy it before the tenant's in it, it's literally the point where we won't even make you close on it. We can extend that close date if we want to wait, to get a tenant in it.
Okay, so we have just 1 minute left in this segment. I want to make sure so you understand this out there. So they buy the property, they fix it up, then they come to you once it's fixed up, and then you can buy it and the tenant's already ready to go. Correct. Did I understand that correctly?
That is correct.
So, hello.
And we pay the property management fee to get the tenant in there. The buyer doesn't have to do that.
Yep. So you're getting ready to go, dressed up. I mean, my gosh, you do all the heavy lifting.
So if Gabe buys the next property, the day he closes, he gets the prorated rent for that month immediately that day. He gets immediate cash flow.
Hello. So typically, if it's done like a regular mortgage loan, then that means it's guys like us that are doing it. So you're putting on an investment property typically 20 to 25% down to own that property.
Yep.
Okay, guys. So that means, let's say it's a $100,000 loan. Now, typically you invest that 25% to get the investment property. Then you got to put $40,000 in it to update it. Then you got to go find the tenant, spend the property management money, and do all that. So that ends up costing you $65,000, $70,000.
Right.
Hello. How about now with that $70,000, you can buy 3 properties?
That's correct.
Yep.
That is a win if I've ever heard of one. We're going to have you guys back. You guys obviously have a great reputation. If you can text investors and they can say, I want to put a contract on it. You don't get that without doing it right and giving people real returns. So, unlike the major Ponzi scheme that goes on in the stock market.
And we want to thank Matt, because Matt's been very beneficial to us. When our investors have questions, we say, call Matt. And that's a huge plus for us, because we don't pretend to be lawyers and try to know everything. We say, call Matt Aycock, and he'll walk you through everything that you need to know.
Guys, you have to have a team. You really want to create wealth? Generational wealth for your family, you want to do that? First of all, be smart about your money. Second of all, listen to the show, because you're going to be introduced to experts that can help you not only create wealth, but also protect that with Matt. That's why I do what I do. That is why I have this show, because I need it just as much as you. It's so important, and it's not getting out there, and it sure is crap and getting taught in our schools.
No kidding.
So we want to help you create that wealth and protect it. Call us 214-736-9696 and start creating wealth today. You can also attend the free seminar they have coming up on October 15th at 6 p.m. You want to find out more about this? You can go to our fan page at facebook.com/Tuttle Talk, or go to wealthbuildersavenue.com. That's wealthbuildersavenue.com to get that free seminar and find out more about how you can create wealth. Guys, thank you so much for being here.
Thank you, Andy.
Powerful stuff. Okay, now let's get to a fun time. I love this transition. So bad, but I love it anyway. More cool tech with Brian Moore. This one better not be like last week.
No. You're going to love this one.
I better.
Actually,
I did not love last week's.
I know you didn't. We had a discussion about that afterwards. And so actually, this really fits in well with what Brandon and Dwight are doing at the Wealth Builders Avenue, their investment properties, things like that. I have this app called Houzz, Houzz. And what it does, you can actually...
Have you guys heard of this?
I do. I use it all the time for ideas.
I can't wait to hear this.
Yeah.
Ooh, this is great.
Absolutely.
Great. So what you do is, say you're in the market for doing some interior design, some rehab on your house, whatever. You're looking for ideas. You literally just start swiping through pictures, find something you like, see all those little floating green tags on there, look like little price tags. You touch one of those, it'll tell you the model number of the say this is a cabinet door here. Here's the computer they're actually using, how much it is, where you get it. There was actually an article written in the Dallas Morning News here back in May. A guy who was a VP of finance over at GE Healthcare, every single contractor he interviewed came exclusively from this Houzz app. And he wound up redoing his entire house from the app. They have a great website too, houzz.com, houzz.com.
Guys, that's a great app. I'm glad that you knew about that. That's helpful to know. So if you want to be in the know and find that on your own, that's a fun time. It's kind of like Pinterest specifically for your house there and getting all kinds of cool ideas and price. So you can do it all from your phone. Brian, would you make sure put a link to that on the website today?
Yes, we will have a link after the show.
Okay, awesome, guys. So go check out it on facebook.com/Tuttle Talk. You can connect with all of us all the time at andytuttle.com. I hope you've enjoyed this hour. I sure have. This has been a great show. And that's it for this show, actually. So we are out of time. I'd like to thank Brian Moore, Gabe Abshire, Matt Aycock, and, of course, Brandon and Dwight with Wealth Builders Avenue. I'd also like to thank Dan Bradford, our production director, and the entire family here at KSKY. Remember, if you want to reach out to us, you can do that 214-736-9696. We're here to answer your questions and take care of you. Thank you so much for tuning into Tuttle Talk, where we're making financial intelligence a priority in the community. Have a great weekend.
You've been listening to Tuttle Talk on 660 AM The Answer. You can reach Andy at 214-736-9696. That's 214-736-9696. Or email him, questions@andytuttle.com. Don't forget to become a fan of his show by going to facebook.com/Tuttle Talk. You can also catch previous shows by going to andytuttle.com.